So good afternoon, ladies and gentlemen. It's a pleasure to be here with my distinguished panel. Let me introduce my panelists. To my left is I'll ask my panelists to introduce themselves because I seem to be missing some of the bio, especially from my colleague from M-Pesa.
So good afternoon, everybody. My name is Esther Waitito. I am in charge of M-Pesa, the title that we use at Safaricom is Chief Financial Services Officer. I'm a career banker, having been in banking for over 20 years. And so coming into the mobile space, which is an extension of financial services, is quite exciting. So I'm very happy to be with you all today to share what we are going to be doing together to drive remittances. Thank you.
Good morning, everybody. Thank you, Janity. My name is Malik Sek. I'm Managing Director for Africa for RIA Money Transfer International, #2 worldwide in money transfer. I'm based in Dakar, managing the whole continent with a larger team. RIA is present in 180 countries, operating with a lot of partners throughout the world. Previously, I used to work in a regional money transfer company based in Dakar, named Money Express, operating in Western Africa and being kind of a gateway for many international companies. And since 2010, heading the regional office for Africa and based in Dakar.
Very good morning to everyone. Bonjour, for those who speak French. My name is Didier Ngouikimfura, Chief Strategy and Growth Officer at Smart Africa. Smart Africa is a Pan-African organization which was born from 10 years ago and now accounting for 39 countries in Africa, which is driving digitalization of the continent. Chaired by President Kagame at the board and regrouping all the head of state at the board of the organization. The organization is driving several initiatives, cross-border initiative, digitalization in Africa. Prior to that, I worked for the government of Rwanda for a few years as Director General in charge of ICT, and I also worked in academia and other government, government position. Thank you, IFAD, for inviting us. It's a pleasure to be here.
Hello. Good afternoon. Richard Miseko is my name. I am head of global sales for Rapid Transfer International. Rapid Transfer International is the Pan-African remittance platform that was recently launched by EcoBank in Europe, facilitating migrant remittance from 25 countries in Europe to Africa, in all countries covered by EcoBank, including Ethiopia that we just recently launched. So we transferred to 34 countries now in Africa. So EcoBank indeed is leading the way in playing an active role in the remittance space in order to force down the cost of remittances within the continent, which is estimated to be the very highest globally. So EcoBank is leading the way in that regard. Prior to EcoBank, I was country director for World Remit in Canada and one of the founding management team of the remittance platform, where I had the responsibility of developing the fully online dedicated remittance network across the world, not only in Africa, but also in Asia and Latin America. So now, of course, we all commonly know World Remit. It has become a global brand. So that was what I was doing prior to coming to EcoBank to replicate the experience of establishing a most successful remittance platform within the continent and also for migrant workers in Europe and beyond. Thank you.
Thank you to all my panelists. So as you have seen from the title of the discussion today, we have reaching a revolution in remittances in terms of digitalization. Now, what we have witnessed during the COVID pandemic is that the share of digital remittances has really gone up. But now after the COVID pandemic, it is stagnating or it has come down on a global basis. Data reveals that out of the share of digital or mobile money remittances has in fact come down from 5% to 4.7% now. Though in terms of costing, what we find is that mobile money, sending mobile money on the sending side is much cheaper, and the same holds good when receiving money in an account on the disbursing side as well. Now, even knowing that there is an advantage in using accounts either to send or to receive remittances, there is this trend that we are seeing that the growth in digital remittances is not going the way it should have gone. It is continuing to stagnate. And as you saw from the remittances prices worldwide database, on a global basis, the cost of sending a remittance is now 6.24%. And within Africa, it's of course even much higher than that. So the G20 target of reaching 5% is still a far way off. And even to go to the SDG target of 3% is still going to be taking a lot of efforts from all the players, including the regulators and the service providers. So with this brief introduction, let me kickstart the discussion with my panelists. And I would first ask Malik from RIA to come in. Malik, what are the most recent changes in the money transfer ecosystem on the sending side? And what are you seeing as the trend towards digitization post-COVID?
Yes, thank you, Genesee. Just to tell you that this panel, for instance, is a good illustration of what COVID has, as positive consequences. EcoBank is partnering with us with Rapid Transfer. We are partnering with their, M-Pesa. COVID has helped to change the way we're doing business. Today, we are not consider ourselves as competitors with their fintech, with banks. We're all working together because we have something that they don't have, which is the network, the payout network, and they had, at the send side, a digital tools to initiate transaction. And since COVID occurred, we've seen not the flow has substantially increased. If we consider sub-Saharan Africa, we had an increase. If we remove Nigeria, because of the currency issue, dollar payment, sub-Saharan Africa has substantially increased after, during COVID. We was very scared, when COVID happened in, I think, February 2020, we all was scared because we were thinking, because of lockdown, that we would be even losing our job. But what we realized on May, we were doing more than before even COVID for two reasons. The first one was informal transaction has substantially diminished. No airport, no travel, and migrant was obliged to go to formal channel to do remittance. And also digitals came, we accelerate, we as RIA and many other money transfer companies accelerate our digital platform, having digital everywhere in the sending countries, and migrant was capable to send from home. And the third reason was the partnership between us and fintechs, companies sitting in Europe and in Africa to ease also transaction. So that was, Janedi, what happened before and after COVID. Thank you.
Yes, sir. Could we hear from you from the mobile money perspective?
Yeah, thank you. So let me build on that. I think from a mobile money perspective, what we saw was accelerated growth from an M-Pesa point of view. And it's interesting when I listened to the speakers earlier this morning, thinking about how we need to invest in the infrastructure and to give back. I think the infrastructure then became a very, very critical part in terms of enabling us to grow. So M-Pesa has invested in a very strong agent network. And that agent network is a backbone of how we're then able to get cash in and cash out. The partnerships that were built, and with a lot of people in this room, we started in 2009 with Western Union, and today we have at least 25 relationships with different remittance companies. What that has simply meant is that there are more points that are able to bring money into the system. It means then the distribution, because everyone has a phone, makes it then easier for people to receive money on the phone. And a couple of things happened during COVID. Because we were not able to be in touch with each other physically, it meant that the use of digital tools became more accelerated. So that saw a lot of growth in terms of use of mobile money and increase in remittances during that period. But also another thing which was more, from a government perspective, is also price. So price came down, and actually that accelerated the affordability of processing a lot of the transactions. It's literally the beginning of this year when, for example, money moving into M-Pesa from the bank started being charged. And in that time, between 2020 and 2023, we have seen the number of mobile money transactions, the volumes increase 3 times. So that means that if we have the right pricing point and the right outlets, this will continue to grow. So from a Safaricom mobile money perspective, we believe that has accelerated. I think the thing that we need to invest in for the future is really around making sure the experience for the consumer is much better. You'll recognize that a lot of our customers are using feature phones, 2G phones. The technology has continued to change and evolve, so there's a lot more that's available. So that continues to be our focus, to make sure that we're then improving the service and making sure that the pricing point continues to be the right one.
Richard, your perspective from the commercial bank.
Yes, indeed. During COVID, we saw a significant uptake in the digital channel. Well, EcoBank, the largest commercial banking network in Africa, and is also recognized as a leading digital bank, and has even won an award in that regard. Specifically, during COVID, we saw a significant uptick in the adoption of the digital channel of the EcoBank product that is called Express Account. Express Account is a proprietary product of EcoBank that imitates the mobile money service. And the significant thing about that really is that it removes the illusion of low cost of the mobile money service. Because mobile money service, yes, it's very accessible, and costs will seem comparatively low when you use it. But realistically, you find out that when you encash, you pay fees. And ultimately, you don't encash the full value of your remittance. But the EcoBank Express account allows you not only to benefit from the mobile money service, but to also encash your remittance value 100%. And then, of course, there's also the point about the product that is called agency banking, which is, in other words, proximity banking. EcoBank brings banking to the people in order to be able to get them financially included for inclusive prosperity. So gone are the days whereby banks is something far away, and most intimidating institution. Now, EcoBank brings it close to the people, and it's more relatable through agency banking. Although ultimately we saw that despite the uptick during COVID in the digital adoption, we saw a situation whereby after COVID, people relapsed to their former ways of doing things. And that's a significant point that we can drill into to find out how come, people who appear to have adopted the digital mode of doing business have now relapsed to their former ways. What is wrong? What is the missing link? And I think we can have the opportunity to also examine that. Thank you.
Didier, could you share from a Smart Africa perspective, please?
Thank you. I think to respond to the question, indeed, COVID has been an accelerator. When COVID started, a lot of government pushed for adoption of cashless solutions, banking, mobile money, and so on. I'll give an experience from the Rwandan perspective, because I was during lockdown, most of the lockdown I was in Rwanda. Every 2 weeks, government was releasing a cabinet resolution about instruction around COVID, but there was always a sentence or a couple of sentences saying that the use of cash is not allowed. We should actually use mobile payment. So this was a big push. I think that was the biggest push that with the risk of infection related to the manipulation of cash, was a big booster, and we saw several hundred of fold in terms of increase of payment. Payment to merchant was literally done over merchant codes, and this has not been just a trend for Rwanda. It has been, I guess, across many places in the continent. So here I'd like just to bring the role of government and the weight they can really bring on the table when they adopt and when they push for the adoption of mobile payment. And now when you look specifically on cross-border payment, I think this also, especially remittances beyond the domestic payment, there was also a multiplier effect. More and more partnership took place between, as Esther was alluding, the number of partnerships continue to grow. There's more and more cross-border payment happening. We have organizations like MFS Africa and others that came. But we also saw a rise of fintech solution coming. We heard about World Remit and many more fintech that really position cheaper, faster solution, and it increased also the amount of remittances. Of course, there are still barriers, because it starts with the inclusion and digital inclusion. For example, for you to be able to make a payment, you need at least to have a device. To be able to at least to make mobile money payment. And we still have a lot of people. There's a limitation that could not be broken because of some of these digital inclusion challenges. But having said that, I think it's, after COVID, there's been a bit of, some people prefer to use cash for different reasons, because I think the biggest competitor here is cash, right, to digital payment. So, and for different reasons, people still use cash. But I think generally there's been quite a growth, and I'm sure our fellow panelists here can share with us some numbers about how it has actually grown. So globally, I believe we've seen a growth, but with a small slowdown over the last few years since the pandemic has started being under control.
Thank you, Didier. Now that leads us to our second question, which I would ask, which I'd like to pose to my panelists. Why is it that we have seen the advantages of going digital being less expensive, but why is it that do the panelists have they observed whether there are a particular segment of customers which prefer cash, so they have gone back to cash, and if so, what do they think are the challenges that they're facing? Starting with you, Richard.
Yeah, thank you, Srini. Indeed, that's a most pertinent question, and it's also, goes back to the point I was trying to make earlier about the significant percentage of people who had gone back to their former ways. In my own analysis, I just realized that it is simply because some of these technology that we seek to adopt is not necessarily rooted in the people's ways of life. It's not rooted in their culture. You know, it's something that goes along the line of the copy and paste imitative culture that don't necessarily have the people buy in. And so we cannot overemphasize the relevance of going digital. And I like it when a lot of emphasis is placed on the need to not leave anybody behind. So if we don't have to leave anybody behind, we have to examine how we can still, facilitate the acceleration of the digital adoption. So what I have seen from my, personal experience on the field is that ultimately there is a development process that cannot be circumvented. You don't just impose the digital adoption on people, but you guide it, you assist it in such a way that, you could create a customer experience center where, you'll be surprised how even educated people are challenged when it comes to, taking the digital option. And so that goes to underscore the need for the personal assistance that people require. Sometimes the tagline of advertisement for digital adoption is that, you can send money from the comfort of your home. But we have a lot of people who don't want to send money from the comfort of their home. They want the personal, the physical contact, the love of the warmth of human contact. And so as a result of that, a customer experience center will provide a space where they can come and relate to human. It's not asking them to bring cash, but it's just asking them to be assisted to take their first baby digital steps, if I may say, until gradually they will then become more confident in using the digital option and become fully independent. This is one of the ways, and of course they can be also the hybrid form where people could start transactions online and then complete it offline, gradually until they will just, be inspired. They will have the confidence to then do everything digitally from end to end. Thank you.
Thank you, Richard. Esther, are you seeing any particular customer segments which are still preferring cash? What is your experience?
So yes, there are some segments where we see this preference for cash. The very first one, which I think is also relevant for the audience here today, is also for the displaced individuals. The immigrants, they prefer to receive their money in cash. That is as a result of sometimes not having the right documentation. KYC is alive. It's something that we all must comply with. And for a lot of these displaced people, especially, with what's happening in Sudan and as an example and everything, it then means cash then becomes the way of operating. So that is a segment that continues to trade, quite heavily in cash. And also as we see, some level of MSMEs also starting to scale in their businesses, as they also seek to build the necessary documents that will allow them to trade, we also see that there is some level of cash that happens in that space. And I do think from the data that we're seeing in partnership, for example, with FSD and some work that we've done, these micro to medium enterprises, some of them actually still do a lot of their trade in cash. And there is a huge opportunity for us if we could then digitize a lot of these trade transactions for them, because a lot of it is acquiring, services and products from different corridors. Even within the region, we see that continues to happen. So the role that I think we should be playing as payment service providers is trying to ease that process and work together with our regulators to see what can we do for those groups that are a little bit more disenfranchised. I think the other thing from my perspective in terms of why also the use of cash is also high is that there is a responsibility that we have around digital and financial literacy in terms of showcasing the benefits that come alongside with that. And I think in the person-to-person, the P2P space, in the consumer space, that's well understood. But when we move it to the next level where we're looking to do trade, have we worked sufficiently with traders and these macro enterprises to give them the tools that they need? So there is a role that we have to play in terms of both digital and financial literacy. And there's an interesting statistic. You did ask about statistics. Looking at Kenya, we found that we have about 15% of MSMEs that are using any form of digital services. So that means there's a huge opportunity out there, and that means that without that literacy, it means then the ability to digitize and sell those benefits also becomes a little bit more challenging.
Thank you, Esther. Malik,
Yes.
from the remittance provider perspective.
I think that we should consider the profile of our customers. You have two types of migrants. Migrants working in international companies like IFAD or sitting in New York, in Rome. Those guys have their family on site, they have a mortgage, they have a Mercedes. They're not our main road. Our main road are low-educated migrants. Those who are selling hats in Broadway in New York, cleaning the metro in Paris. For those migrants, their family are back home. They're living usually alone, and the whole family are in their home country. And those profiles are not very internet-based. They're very cash-based. Mainly the old migrants that used to use cash, and they say, it works, why should I change? However, we've realized that, digital is substantially increasing, even though we didn't see in our books no cannibalization until recently. The cash was growing and digital also was growing. 2 double-digit in digital and even 2 double-digit in cash. No cannibalization for now, but we are observing a shift from cash to digital, little by little. And the partnership we are signing with all those fintech, helping them to cash out. Because to use digital, it would be good to have also at the lending side a network acceptance. In Senegal, for instance, digital is growing very fastly because we have a large network acceptance. In Kenya, it should be the same. But if you send money in Morocco, for instance, when you receive it in your mobile, you immediately cash out your transaction. And we should know also that the success of international companies, success of those traditional companies is still network. I think M-Pesa is the most successful mobile in the world, and they do have the largest payout network in the world. So it's extremely important to have that cash out network to ease, remittance from the send side. We are partnering with Remit, with Remitly, with the MFS very soon, because they benefit from our cash out network. In the rural areas, we have the network, but you don't have a lot of acceptance network. Like people use money, for this social ceremony. The note has some values. When you go to any African ceremony in Kenya or in Senegal, or when people give money to, they cannot send, like a mobile thing. They use cash to give. It has a social meaning in our culture. So, but I believe that digital will keep increasing because of the convenience and easy to use because of an easy KYC. You just KYC yourself once, and you can send many times. In our network, you have to KYC it anytime you came, because there is an obligation to identify the beneficiary and the senders for every single transaction, which is not the case for digital, where you are KYC'd once, and then you can use it, wherever you want. Thank you.
Yeah, what is your perspective from the experience after COVID? Do you see customer segments going back to cash?
Well, I think it's on both sides. Some people adopted it and it's now part of their life. Again, here I'll talk as a citizen. Today, I carry less cash than I used to carry before. Most of the merchants today in Rwanda and the same in Kenya and many other parts in Africa, people are used to pay merchant with mobile money. So it has really become something that is quite entrenched, because we all remember that this pandemic lasted for over 2 years. So it's enough time to start seeing changes in our behaviors. But again, there are people who prefer still to use cash for different reasons. First of all, they are familiar to cash. They've used cash for all their life, for 20, 30, 40 years. Sometimes the 2 years is not enough for them to completely switch. Or there's also the convenience. Some people feel that they manage better when it's cash than when it's on a digital wallet. There are also people who have different, they feel that it's maybe not secure, maybe because of an experience or some news they've heard from someone they know that a payment was never delivered, and they're quite hesitant, they're not very sure, or to claim when there's an issue, maybe the support that was provided was not to the level they were expecting, so they prefer really to keep the cash. So security also, or a perception of security, of having maybe the account hijacked, money stolen, all of this is perception. Also remember that we're in an interesting era of fake news. A lot of some news can propagate very quickly, and people not even do a bit of due diligence to see if it's true or false. I'll also add on top of that charges in some market can also discourage people to use mobile money, because there'll be places where charges are quite high, and they feel that if they pay with cash, it will be actually cheaper for them than adding this charge on top, especially when the perception is that the user is actually the one paying the charge and not the merchant. And that's where actually the role of merchant is very important. We've seen beyond mobile payment, even for payment with POS, for example, when merchants feel it's expensive, they hide the POS, and they say, no, my POS is not working, and so that they can receive the totality of the amount. So it's a combination of different things, but I've seen it during the pandemic, when the government worked with the private sector, here with banks, mobile money service providers. When they decided to work together, there was a huge change in terms of adoption. That's why it's very important that there's a supportive legal and regulatory framework. There is a dialogue between the private sector and the public sector to make it happen.
Thank you, Didier. So we have looked at customer behavior and customer choice as one of the issues that has probably resulted in not seeing the trend growth in the digital remittances that we would have liked to be seen. Having said that, Esther, I would like to ask from your perspective, do you find any regulatory barriers or access to payment system infrastructure, as contributory factors along with customer behavior, which is pushing customers or drawing them away from using digital means?
Yeah, so thank you for that question. Definitely when in in the spirit of providing a service, sometimes regulations can, feel like a bit of a hindrance. So, from a regulatory perspective, I think with the introduction of multiple rules that come in, we, of course, anti-money laundering is a very key one, which means that we're going to be doing a lot more verification of types of payments and remittances coming in. And I think that's more for us as users to see how we can get that to be a lot more effective. Then entering the space of data privacy, right? It's a hot topic in terms of how do you then protect data? How do you ensure that as transactions are being done digitally, that we're also protecting the users of the same. So from a regulatory perspective, I think that's also another key consideration for us to think about and to see if we can get common understanding. Because if I look at the regulations, I look at the application, say in Europe, versus the application in Africa, there are variances which make it a little bit difficult in terms of getting that going. And so that can also potentially then be a barrier if we don't have a unified way of managing this from a regulatory perspective. So those are the two key things I see from a regulatory perspective. It's clearly a very exciting space to be in. The central bank literally, licensed an additional 20, payment service providers. So that means it's still attractive. There's still an opportunity for people to come in. So how do we just make the playing ground, level, and how do we have the mutual and common understanding? When we look at customer trends, looking at customer trends, we've had the issues that people are reverting back to cash. But I think the real thing for customers is they want to ensure, especially now, given the economic challenges that we're facing, not just locally, but I think also internationally, where we're seeing a lot more, inflation coming through, pressure on individuals' wallets coming through. There has to be sensitivity around how we price. And so that means we're seeing pricing models around payments also need to start evolving to respond to some of those needs. And I think that's where a lot of work has to be done so that we can then, so I think the pricing models as they sit today, based on what consumers want, the message is very clear that we need to do something in order to address that. I think the other thing from a consumer perspective, consumer behavior perspective, is also the point around segmentation. One size doesn't fit all. And so we have to then think consistently around how we're serving the different niches that we're in and working with partners to be able to provide that sort of infrastructure. How do we ensure that we have sufficient merchants who our consumers can trade with? How do we make sure our agency networks remain robust? The investment in technology, using blockchain to secure payments, because a big threat that we see and a hindrance is an issue around cybersecurity. And so those are things that we actually need to start looking at to say, what can we do in order to make it a lot more secure? Because what our consumers are truly looking for is value, safety, because this payment business is a business of trust. And so I think that would be particularly key from a regulatory perspective. In terms of infrastructure, again, it's how do we get our systems to be more robust? How do we make sure that there's sufficient investment in speeding up the transactions that are processed per second? So those would be the key ones from my side. Thank you.
Richard, your perspective, please.
Yes, I would say it's a combination of all the factors, regulatory and infrastructure, and the reality of the industry. You have a situation, for example, where, talking about regulatory, you have a situation where in the UK, for example, you don't even require KYC to be able to send, if my understanding is correct, to be able to send up to £200. There's really no KYC obligation. And in Canada, that amount goes as high as 999 Canadian dollars. You don't, it is from 1,000 that you have the obligation to really identify your customer. But you will hardly find any platform any remittance platform that does not do thorough KYC, even from £1 or just $1 Canadian. So because if they say, oh, the regulation allows me to be able to at least, not do KYC up to a certain amount of money, you find out that they are going to be debanked, they are going to be de-risked. And without a bank account, you cannot operate a remittance platform. So there are all these challenges, and the bank policy is because remittance is considered as a very high-risk venture, and so the regulation and scrutiny in that regard is so very tight, and so that the remittance operators themselves tend to go far and above what is required in order to be able to remain active in this space. There's also the question about the pay-in. Because again, when we speak about digital, we must recognize the fact that comparatively, the amount of money you are able to send through the digital platform is comparatively limited. From end to end, it's comparatively limited to when you are able to send through other means. And the pay-in option in Africa is so very limited. We are all familiar with the payout option. We can do cash pickup, we can do deposits to bank account, we can do mobile money, and so on and so forth, or payment to other banks. But significantly, what about the pay-in option? In Africa, you find out that the most popular pay-in option is to be able to pay through apart from cash, to be able to pay through your bank card. And the processing cost of bank card is so very high. It is unlike in the major send markets, for example, where you are able to pay in not only with the card, because bank card really is not a most viable tool for remittance payments, because it's cash advance and the interest rate is higher and so on and so forth. But you have the options to be able to pay directly online from your bank account, which increases the volume of the amount you're able to send. You have different forms of PSPs, payment gateways, in Netherlands you have Ideal, in across Europe you have Trustly, you have so forth, and in Canada you have Interact and so on and so forth. So it is just the opportunity to be able to also enlarge that pay-in option in Africa to have, in order to be able to also promote the use of the digital platform. Thank you.
Thank you, Richard. Didier, what do you think that from a regulatory perspective that could be done to further increase digital payments? Do you see any barriers there? And I request you to keep your answer precise, because I have to give a floor to Malik as well, and we are running out of time.
Thank you. I think, indeed, remittance involve countries. And I think the first thing that we would like to encourage is actually countries to talk together, central banks. They are the one who pass those regulations and those laws. And there are a lot of restriction also that happens in remittances, forex restrictions. So having them to talk together and to create a predictable and harmonized regulation that really favor such transaction for us is one of our priorities. Important to say that we have a bit of limited interaction for the moment with central bank. We usually work closely with telecom regulators under Smart Africa, but it's an area that we've been entering, and especially also with the FCTA, the Continental Free Trade Area. So those specific on regulation, I think it's important that to have them, but also that they listen also from the private sector. Those are the people facing the customer. They have the last mile infrastructure. So it's important that it's not just a conversation between regulators, but a regulator with the service providers, so they understand the hurdle, the challenges on the ground, and adjust and provide supporting regulation for that.
Thank you, Richard. Malik, the last word from you before I conclude.
Yes, as I said earlier, there is a combination of both, as you rightly said. We should not forget the customer profile, because business is not technology driven, it's customer need. And those guys, you know, they have their behavior, and we know the way they behave. We know where they live, and which is not the case sometimes for fintech, who are in the business, because they have, you know, that technology, but they may not know maybe the customers. The second thing is, of course, the regulation. There's a lot of intermediary. I cannot sign directly, for instance, with an EMI licensed company. We need to go through a bank, which increase, of course, the costs, etc. And the other thing is also the lack of interoperability in the continent. You know, there is very few, I think, M-Pesa are experiencing it very recently, but nowhere except here you don't have interoperability. You know, each mobile has its own money, and which is not easy for the lending at the lending side. And the third thing is, you know, the business, the digital business is going fast, is taking the lift, while the regulation is, you know, taking the escalator. There is, you know, they should engage central bank, you know, valuable discussion with the stakeholders, with fintech, with the MTOs, MNOs, to adjust, you know, to adapt to the regulation. And this is a real issue, you know, in terms of KYC, in terms of, you know, limits, sending limit, which is very low for those who are not fully KYC'd. And if we know our customers, we do know that most of them could not be fully KYC'd, so they can send a limited amount. And since, as I said, they used to use the, you know, the payout network, and it works, why should I change? And again, the success of any international companies in terms of remittance is the success of its network. And M-Pesa is a good example, even though it can be considered as a fintech. We all are fintech, because fintech meaning kind of a payment platform. We do have that payment platform even before fintechs, you know, so, but the network is key. The size of the network is important. Thank you.
Thank you to all my panelists. So for me, the key takeaway from this discussion has been that there is an uptake from the customers for digital remittances, but there is a lot that needs to be done in terms of overcoming the digital divide and make more efforts towards financial inclusion. Apart from that, some of the important points that have been made is the need for interoperability, need for tailoring products which suit various customer segments, and need for both domestic regulatory coordination with domestic stakeholders, as also cross-border interregulatory coordination would further help in this journey towards digital remittances. So we conclude here, and I'm not going to hold you back. I think we have taken 5 minutes of your time, so please enjoy your lunch. Thank you.